So your job offers health insurance, and that immediately puts you at a crossroads, right? Do you just stick with the plan they give you, or do you venture out into the health insurance marketplace? It's a really common question, and in this explainer, we're going to break down exactly how to find the best deal for you. It's so easy to just assume that the insurance from your job is the default choice, the no-brainer. But is it always the smartest financial move? Well, let's dig in and find out. Okay, so first things first. To figure this out, we need to get crystal clear on what we're actually comparing. It really boils down to two very different ways to get health coverage. Let's look at the trade-offs here. On one hand, you've got the employer plan. It's super convenient, your company kicks in some money to help pay for it, and you get a nice little tax break. But on the other hand, you've got the marketplace. This is where you're in the driver's seat, shopping for a plan yourself, and, this is key, you might get some big discounts from government tax credits. We call those subsidies. Now, this is where our story takes a really crucial turn. See, for a single person, the math often points in one clear direction. But the moment you start adding family members into the mix, the whole equation can flip completely on its head. So why do employer plans look so good at first glance? Well, it's because, on average, your company pays a huge chunk. We're talking 70 to 80% of your monthly premium. That is a massive, tax-free benefit. But did you catch the key word there? Your premium? And yup, here's the catch. While your boss has to offer you insurance, they have absolutely no obligation to help pay for the rest of your family. And that means the cost to add your spouse or a kid can be shockingly high, because you might be footing that entire bill yourself. All of a sudden, that great deal for you becomes a pretty expensive deal for your family. Health insurance expert James Saab really hits the nail on the head. He says for individuals, yeah, the employer plan is usually the right move. But for families, you absolutely have to run the numbers. So how does the marketplace even compete with that? Well, this brings us to the marketplace's secret weapon. It's the one thing that can slash your costs and potentially beat even a good employer plan, especially if you have a family. It all comes down to something called premium tax credits, but let's just call them subsidies. To put it simply, it's money from the government to help you afford health insurance, and the amount you get is tied directly to your household income. So the lower your income, the bigger your subsidy can be. And this can take a plan that seems way too expensive and make it totally affordable. Now the best part? You don't have to guess if you qualify. You can literally find out in about 10 minutes. Just pop over to healthcare.gov, look for their subsidy calculator, and plug in your family size and income. It's a simple step, but it could seriously save you thousands of dollars a year. And get this, here's a little-known rule that can be a total game changer. Even if your job offers you insurance, you might still be able to get marketplace subsidies. The IRS has this thing called the affordability threshold. Basically, if the plan your job offers just for you costs more than a certain percentage of your income, the government says, hey, that's not affordable, and boom, the door to getting subsidies swings right open for your whole family. Okay, so we've looked at premiums, we've looked at what your employer pays, and we've talked about subsidies. But to make the right call, we've got to pull all of this together into one single powerful number. Honestly, the biggest mistake I see people make is they only compare the monthly premium. That's just one piece of the puzzle. To really, truly know which plan is cheaper, you have to look at your total potential cost for the entire year. And this is how you do it. It's actually a pretty simple formula. For each plan, your work plan and a marketplace one, you're going to add up three numbers: your total premiums for the year, the plan's annual deductible, and the out-of-pocket maximum. What you're left with is your worst-case scenario, the absolute most you could possibly spend on healthcare in 1 year. Whichever plan has the lower total, that's your better financial bet. So, we've gone down the two paths. We've talked about the family exception, the power of subsidies, and how to calculate your true annual cost. All right, let's tie this all together so you can make your final choice. So here's the bottom line. It probably makes sense to stick with your employer's plan if they're kicking in a generous amount for your coverage, and your income is too high to get any subsidies. But you should seriously look at the marketplace if you're self-employed, if that family coverage from your job is just way too expensive, or if your income puts you right in that sweet spot to get a good subsidy. And that brings us to the final, and maybe the most crucial takeaway. This is not a one-and-done decision. Your employer's contribution can change, the plan details can change, your income can definitely change. So what was the right answer for you last year might be the totally wrong one this year. The real question isn't just about what you'll do for the next open enrollment, but for every single one after that. Have you actually taken 10 minutes to run the numbers?